Hi everyone, I'm Anthony for Fine & Country Northampton. In this video, I'd like to talk about the coronavirus lockdown and more importantly, the economic aftermath. We've all seen the articles in the papers predicting a property doomsday, apocalyptic falls in property prices, and I would like to use information, both present and historical, to explain why I believe that this is not going to happen. On the contrary, with the exception of a few imminent distress sales, I believe the market will not just bounce back, it will actually rebound back for many reasons. However, let's have a look at what they're saying and then I will give my opinion why I disagree. In the first news article, we are seeing house prices forecast to drop 13% this year as property sales dive and incomes are hit by the coronavirus lockdown. The southwest is expected to fall 13%, Wales 14.5%, the East Midlands 12.5% and London 11.25%. Northern Ireland will drop 16.5%. The crash will be driven by the rental sector as the amount tenants can afford to pay plummets due to wage cuts and unemployment. For the historical, I'll start with a really important date, 16th of September 1992, Black Wednesday. For those of us who remember that day, you will probably understand when I say that for me, it still haunts me to this day. That was the day when I went to sleep in the black and I woke up with a shortfall of hundreds because interest rates went through the roof. That was caused because our banking system was tied to the ERM, which was the predecessor or the framework for the euro. Interest rates hit 15% overnight. This caused long-term damage to our economy, sending us into a deeper, longer recession than we had ever had before. Moving forward a few years, many of us will remember the financial crisis of 2008. That was 3 weeks that changed the world. That all began on Sunday, the 9th of March 2008, when Eliot Spitzer, governor of New York, called his aides following revelations about the former New York Attorney General. He was caught with a wire trap and several revelations came up that led to a domino effect. The following day, Blackstone Group manager of the world's biggest buyout fund revealed it had suffered a 90% profit drop during its fourth quarter. In Britain, house builder Bovis meekly warned that unless there was an urgent cut in interest rates, the property market would collapse. It was a message the Bank of England failed to heed until much later. Over the next 3 weeks, we saw banks reveal the losses they had suffered as a result of risky hedge funds. This is now prevented from happening by strict legislation. At that time, many residential lenders were investing heavily into hedge funds, which were very, very risky. A lot of them were repackaged subprime loans that had defaulted and led to heavy losses by the banks. This is now forbidden by regulation to prevent the same thing happening again. But how does that compare to the market today? Today, banks are in fantastic shape. They are more profitable than ever. They have massive resources of liquid funds that they want and need to lend. But why is that? For anybody who has studied historical interest rates, you will be aware that through the 80s, the average base rate was between 8 and 10%. Through the 90s, it was between 7 to 10%. And through 2000 to the present day, it has been below 5%. Obviously, there was a massive fall in interest rates following the crash of 2008, which has continued to this day. However, During the 80s and 90s, banks were often lending mortgages at somewhere between 0.5% to 1% above the base rate. That is the rate that they would have to pay for the money. In 2008, when the base rate dropped to 1% or thereabouts, the lending rate on the variable standard rate that most mortgages are lent out at remained around the 5%. This gave banks a much larger profit margin. And even today, there are many deals around for 2 years or 5 years that may be around 2%, 3%, depending on your situation, your loan to value and your credit status. There are still millions of lenders out there who are paying the standard variable rate of around 5% or above. But the banks, until recently, were paying less than 1%. Now they're paying 0.25%. They have never made as much profit as they are making now in history. They are literally flooded with the money that they want and need to lend out. So we then come to the question that every one of us in the property industry is often asked: how is the market? The normal response that people may expect is it's rising, it's falling, it's a buyer's market, it's a seller's market, etc. But I would actually break it down further than that, and I would always do respond with a question. Which section of the market are you interested in? Because it varies. What benefits one may not benefit another section of the market, depending if you are buying, selling, investing or developing. Under the current circumstances, no matter what happens to the market will keep moving. I think we can all agree that there will not be an apocalyptic fall in the market. There may be some small changes, although I disagree with the figures that are peddled by the media, especially the large drop they predict in Wales, because I have recently bought a property in Wales. I am looking for another property, and I can tell you, even through this crisis, the property in Wales is actually rising because of the amount of people looking to invest at buying property at fantastic prices in Wales. So that is not correct. Around where I am in the Northamptonshire area, once again, property is not falling. There is still demand and interest even through the lockdown, and I am completely confident that once the lockdown is removed, that the market will not recover. There is nothing to recover from. It will simply resume and progress. We've had 2-3 years of Brexit uncertainty, and definitely through last year, especially in the last 2 quarters of the last year, the property market was almost on pause as people took a wait and see position because of the uncertainty. Once the election was called, we noticed an immediate increase in interest, and in the new year it was really taken off, and it's only the current crisis that has paused the market. And once again, I use that word paused because that is all it has done. And we must not allow the media to terrify us with fall in the property market. They prophesize fall in sales. Well, at this moment in time, sales, or in fact completions, should be almost zero because the government directive is not to move through the lockdown. That's not an economic factor. This is a health and safety matter. So whatever happens, the market will keep moving because as it stands, the banks have money to lend. There is a backlog of people who want to move, and there are funds for them to move. There may well be certain businesses that will go into liquidation through this period. A lot of them were businesses that were struggling anyway. However, this crisis will also create many opportunities. It's also going to be a time of economic change. There is also, I believe, going to be a large demographic change following this lockdown, because there are many companies out there who may well have been thinking about having more of their staff working from home to cut down on overheads, the size of the offices or workplaces that they need, on top of the cost of running them, who are finding now that their businesses are running perfectly well with many of their staff working from home. Those who are working from home may now have thought, actually, I can continue to work from home, and with the money that I spend on my annual season ticket to travel to work, if I were to buy a larger house with a more suitable workspace at home, I could pay that money towards my mortgage. And I believe that there will be a lot of people who will be moving into larger properties intending to work from home as a result of this. I also believe that there may be many companies out there who were either planning to move into larger premises and won't, or some who may downsize and outsource more of their work to people working from home. There will be a lot of change, a lot of movement in the market. However, there are two ways to look at the positives and the negatives, as an agent and as the buyers and sellers. From the point of view of an agent, even if there is in certain isolated areas initially some distressed sales that may indicate lower prices, they will be snapped up immediately because there is a whole pool of investors out there waiting to buy them. That will then get the market going, and either way, we as agents will be able to continue selling. From the point of view of buyers, even if there were to be a drop, not a big drop, but a drop, let's take 10% as a possibility, that will not really affect any of the buyers or sellers all the way through the chain up to the very top. And the very top, which may be those who are selling to downsize or emigrate or retire and move elsewhere, that is a unique market, and the type of people that buy those properties are mainly unaffected by the current crisis. But from the first-time buyer, working your way up to the semi-detached, the detached, the luxury detached, the individually built, and so on and so on, a 10% fall across the board will benefit all of them. It benefits the first-time buyer because they will pay 10% less. It benefits the person selling a 2 up, 2 down to move to a semi, because he may take 10% less, but he will pay 10% less on a larger property. So his gain will be greater than his loss, and that will work its way all the way up to the ladder, right up to the very top, which, as I said, is a unique and individual and specialist market. Even though there are many differences of opinion with our position with Europe, one thing that I'm sure most people will concede is that our detachment from the financial abyss that will be Europe in the forthcoming months will be our saviour, as it was in 2008. Many of you may remember that back in 2008, investment was flooding into London from around the world because our wonderful currency, our pound sterling, was the only safe place to invest. And so much money poured into our property market, into business in the UK. That is what helped pull us out of the 2008 crisis. Most property rises are bottom up. The first-time buyers push prices up, as they did when double tax relief ended in 1988, and the entry levels push the next ones up, and it filters up through the chain from London and then filters out from London to the rest of the country. 2008 was different. 2008 was a top-down property rise. It was the investment from abroad into the high-end property in London that pulled that property up and raised its prices, and that in turn filtered downwards and actually pulled property from the top, working its way downwards, and pulled the property up. Then it filtered out through the rest of the country. I have a strong feeling that the Chancellor also believes that will be the case, because at the last budget he did not make any changes to the stamp duty as expected, except for one. As of April next year, overseas investors will have to pay 2% extra stamp duty on anything they buy in the UK. I believe he is expecting massive overseas investment in the future, and that extra 2% on top of the existing stamp duty will actually bring large sums into the Chequers. So I stand by my prediction that investment into this country will increase exponentially. Firstly, because of our position with Europe. Secondly, because our currency is second to none. Our credit rating as a nation is the highest in the world. Europe is already struggling to plug the hole of us leaving, on top of the losses they are sustaining through this crisis, which they are not as well prepared for as we are. And therefore, for these reasons, I believe that our property market will not just resume. I believe that it will actually rebound and go from strength to strength. Obviously, this is all in balance of probability. This is in my opinion, but I stand by my words, and this video will be around for as long as it remains online. So feel free to revisit it in a few months' time and bash me if for whatever reason I'm wrong, but I feel that I will be correct in what I'm predicting. Good luck to you all. Let's not allow ourselves to be terrified by media hysteria. Let's get through this safely, and let's resume and get our country back on its feet. See you in the next video.